Well, thanks, Jim, and thanks, everybody. Can we get to... here we go. So we're going to change this from the U.S. Unconventional Oil Talk to the North American Unconventional Talk. I am the guy from Calgary, so we're going to open up the border a little bit and talk about what's going on north of the border. We have our own lawyers with smaller typeface. And I'll let you read that at your leisure. So who's Pennwest? We're a fairly sizable company based in Calgary, about $10 billion market cap. We trade both in New York and in Toronto. We're really an oil company. We produce just over 100,000 barrels of liquids a day and about 370 million cubic feet of gas a day. Fairly large reserve base as well, and most of that reserve base is light oil. We are the number one producer of light and medium oil in Western Canada, so we are a significant player up in Calgary. And along with that, if you look at our bookings, our bookings are about 70% proved oil. Now, though 15 to 20% of our production currently comes from horizontal multi-stage frac wells, only 5% of our book is that way. No different than Canadian banks. Canadian reserve engineers are pretty conservative. And we've got a lot of room to move on our booking and expect to see that number grow significantly over the next few years. So Canada versus the U.S., yeah, I know we're colder, we're less populated. Along with that, though, our resources tend to be much less developed. There's a lot of opportunity. If it's working in the U.S., similar opportunities, often much broader in areal extent, are now starting to be appraised in Canada. There's a little map of some of the liquids plays. You have heard of some of them already. And there's no doubt a lot of gas plays going on as well. In the U.S., focus has truly been on the appraisal and development of the liquids-rich shale and source rock intervals. In Canada, it's taken a little bit of a different tact. Instead of targeting the shales and source rock intervals first, we've got a lot of what we would call the brownfields. Low recovery, conventional plays that are very amenable to horizontal multi-stage frac technology. These are fields that have 10 to 15% current recovery factors that extend over broad areas that really are screaming for redevelopment. For Pennwest itself, with our position, we have over 5,000 locations identified on these brownfield type opportunities, more than a 10-year inventory at our current pace of development. Along with the redevelopment plays, the shale plays are starting to gain traction north of the border as well. There's the Duvernay, Devonian Shale, the Nordegg, the Second White Specks, the Alberta Bakken, all big plays, big areal extent. Lots of land dollars are being invested right now. Over the last 2 years, over $2 billion has been invested on the Duvernay by itself. Less than 20 wells have been drilled into it, though. So we're very early on in the assessment and appraisal of these shale plays. The rocks look great. Thank you for doing a bunch of the science up front. We appreciate it, and we think we've got a lot of opportunity in Alberta in particular. Canada-U.S. translation, Chesterfield couch, tomato. A couple of the major plays that we will be talking about, touch on briefly the Duvernay. Really looks like very much from a rock characteristic standpoint an Eagle Ford analog. Down into the tight carbonates, into the conventional tight clastics. Two big projects that we have ongoing at Pennwest are our Swan Hills and Slave Point carbonate plays. Again, an older existing reservoir, lots of oil in place, very poor recoveries, and then also the Cardium, the largest oil accumulation in Western Canada. So, a little bit of a view from our development intensity versus, now granted this is the Permian Basin, so maybe it's as tight as it gets. But for many reasons, in Canada, there's a lot of oil left in the ground. One is we just haven't been nearly as aggressive. Look at 5-acre spacing in the Permian Basin versus 80-acre spacing in the middle of one of our largest pools at Pembina in the Cardium. You can just screams at you. There's got to be a lot more there. Why is that the case? Well, a lot of the reservoirs in Canada are, quite frankly, of lower quality. They don't tend to have high deliverability rates, and pricing at $20 a barrel, not many of them were very economic. Technology, Because of the fact that the reservoir quality was poor, we needed a new technology. Horizontal multi-stage frac technology has really provided that and is really opening up these plays. We've always had a focus on conservation over development. And until recently, the regulatory environment really precluded us getting down to tight drill spacing. And finally, royalty framework. We've had a lot of discussions over the last couple of years up in Alberta in particular. We finally have a royalty framework that isn't a pay me up front type framework. It's a pay me as I've actually made some money. So we have no more excuses, I guess. A couple of the big projects that are ongoing. The Cardium, it's a very big project. It's a Cretaceous series of Cretaceous shore face sandstones. Covers an area of about 12,000 square miles. It's a huge area. It is pervasively hydrocarbon charged. Well over 10 billion barrels estimated to be in place, and as I mentioned, generally low recovery factors in the 15% range. It's a play whose historic field limits were based upon vertical economics, not geological edges. Production peaked in the 70s at about 200,000 barrels a day. It's been on effectively a terminal decline ever since then, down to about 25,000 barrels a day 3 years ago. Since the advent of horizontal multi-stage frac drilling on the play, production now from an industry-wide basis is up to 60,000 barrels. Seen obviously a big impact. In the past 3 years, over 1,000 wells now have been drilled or are licensed on the Cardium. It's a big, big play in Western Canada. For Pennwest, we are by far the largest holder of land on the Cardium with just over 1,000 sections or 665,000 net acres. By the end of the year, we'll have drilled over 150 of our own horizontal multi-stage frac wells. We've got 7 rigs currently drilling. The bulk of recent activity on the Cardium has focused on extending out the existing developed areas, the perimeter or halos of Pembina, of Williston Green, and Alder Flats. Future activity will continue there, but also return to the low recovery interiors, areas that have seen the 4 to 8 verticals per section and low recovery factors. But with 6 to 10 million barrels in place, a lot of oil left to go develop. The type curves with 1,000 wells, they're rapidly becoming more and more predictable, with wells along the trend expected to have ultimate recoveries in the 150 to 250,000 barrels of oil. This is really an oil play. This isn't an oil and gas play. This is an oil play. When you put it in context, Pennwest has an inventory of over 2,500 locations currently identified on its land base. You do the math, that's 400 or 500 million barrels, replaces our book, this one play. So it's very significant. It's a long-term asset. Along with that, it's got water flood and CO2 potential in the longer term. A second project is a little bit different than what I've heard, at least going on in the States. We've got some broad carbonate platforms in north-central Alberta. These are, again, a play focusing on the development of a previously known resource. If you look at it, these broad platforms cover multiple townships, each oil charged throughout. The carbonates were initially discovered and developed in the late 50s at Swan Hills to the south, and in the early 80s on the Slave Point Trend at Otter and Red Earth. From a depth perspective, at Red Earth, you're talking about 5,000 feet. Down in the Swan Hills, you're anywhere from 8 to 14,000 feet, so a broad variation in depth. Historically, the high-energy, high-quality reservoir platform margins and reefs were what was developed, and most recently now, horizontal multi-stage frac technology is being applied to the platforms and having really exceptional results with wells with 3-month IPs in the 200 to 500 barrel a day range with relatively low declines, instantaneous IPs well above 1,000 barrels a day. So it's a play that's got broad aerial extent, it's repeatable, and relatively predictable. For Pennwest, it's a significant piece of our business. We have over 200,000 net acres and are continuing to build our land position here. Our 500 location inventory, I'd say, is actually probably closer to 750 now with additional lands we've acquired over the last few months. And we're actively drilling. We've got 5 rigs now currently drilling between the Swan Hills platform and the Slave Point platform to the north. So in aggregate, Pennwest has a large inventory. I've talked about 2 of the major plays, the Cardium and the carbonates. We have other plays that are being developed with horizontal multi-stage frac technology, the Spearfish just north of North Dakota in southwestern Manitoba. Very dense resource with lots of potential. We've drilled about 200 wells into that play right now with some very good results. The Colorado group, or the Viking interval in particular, both from a gas and oil side, another large, fairly extensive project, along with joint ventures with some of our Asian friends on heavy oil property at Prop and on a shale gas play in the Cordova embayment to the north. So in closing, we might have been a little bit slower on the uptake, but we've certainly got a lot of opportunity in Western Canada right now, both from redevelopment of the brownfields, extending those fields and redeveloping the interiors of them. The shale gas or shale oil projects are in their incipient stages. I would anticipate a lot of activity on those over the next several years. And Calgary is a place that's going to be looking to Denver and saying, you know, we've got a lot of resources here too. I was listening to our friend from Halliburton, and Calgary's a place that's going to be competing for your time, energy, and your interest in developing tight oil resources. So thank you very much. And,
Thank you, Robin. Appreciate you coming down from Calgary. Our next panelist is Gary Packer, who is currently the Executive Vice President and Chief Operating Officer of Newfield Exploration. Gary served in this role since 2009 when he left Denver and traveled his way down to Houston, much more warmer climate than what we're currently seeing right now. I've known Gary for, I think, close to 30 years. Our paths crossed in Lafayette, Louisiana. Because prior to Newfield, he was with a company called Tenneco in the very early days. So little did we know our paths would cross 30 years later serving on the same panel. So please join me in welcoming Gary Packer.